Come on, mate. Good go.
Good morning. Welcome to week number 16 of the year. Go through all the news events and possible movers for the week ahead. One of the main things that is right now in everybody's mind is Euro and possibly EURCAD. We've went through some deeper levels lately, and the possibility that we could go lower is still active. One of the main reasons we are seeing EURCAD giving away the lowest is the big monetary divergence between the ECB and the BOC, so the European Central Bank and Bank of Canada. It is expected that these lows won't hold. So throughout the week, what we'll be looking at, we'll try to see if you can get intraday shorts on EURCAD based on that divergence. And I should also say renewed divergence, as the last ECB meeting revealed there are no rush to hike rates. And in any case, if they are hiking rates, they still will be buying bonds. There won't be a balance sheet runoff, which is very, very dovish. And that's why you saw Euro gave away quite some ground. Levels to look at and things where I'm hoping that EURCAD will stabilize is 1 or 2 levels. I'll be drawing this out. Use mostly our London fixed levels as a guide. So our last London fixed level right after the meeting was around here. So this entire range, I'm expecting this range to more or less gets run down. So we're right now trading about 60 pips above that range. I'm expecting this to come down and stabilize somewhere around these levels. So if I were to draw on the level before that London fix, so really expecting the pair to stay on a 36.80 and start attacking 35.90 levels and eventually blow out those lows as well. So that is our sort of strategy we'll be employing for the rest of the week. Momentarily, we're going to go through the calendar. I have also a look to see where the volatility pockets are that could spark that move lower. But overall for EURCAD, we're now expecting these lows to take. On the London fix as well, itself, the candle left the untagged fix. That's always a magnet, which we're hoping that market will just rotate back into and trade out. Okay, so that's regarding EURCAD. Regarding Euro-USD, fair value for Euro-USD in a very, very immediate term is 0.08. Again, the main reason it collapsed so quickly was because of what the ECB said. Based on election outcomes, because France has got the election, which next week should get resolved. Based on election outcomes, we would expect Euro-USD to trade at 110, but the ECB kind of took those hopes away by being extremely dovish and making any hike seem to be as unimportant or less impactful as we thought originally. CFTC data by most outlets have not been updated yet, but we saw some more euro buying, believe it or not, throughout this week. It is a pattern which I've seen in 2017 as well, but ahead of the French election, euro bulls keep piling in, even though euro is diving. And then after that, you see that euro starts rallying. So that's what happened in 2017. I'm expecting more or less the same thing to happen, but momentarily it makes it difficult to front run this as it's continuously going for an excursion lower. But keep that in mind, speculators are mostly adding into those dips because they see that post-French election, they're going to see a rally. That is the thinking. So that's something we can concern about by the end of the week or towards next week. But for immediate reactions and early in the week, my focus will be on EURCAD to see if I can explode these lower levels, about 50, 60 pips lower. That would be ideal. Another pair it's worth looking at right now is AUD-JPY. So AUD-JPY on the weekly has created several inside bars, and we are looking for some reaction. So if you know from before, all the videos explain how inside bars react. I'm going to quickly draw it out again. So inside bar is when a current candle did not exceed the high and lows before the other one. Another way, it's like engulfed underneath it, the one before it. So here we have one inside bar. We have followed up by another weekly inside bar, which now creates a scenario where we can see some explosive moves on AUD JPY. And the way they usually play this is very simple. So when you draw the high and the low on a candle, what you would expect, you would either expect it for a fake out and a move under and then attack those lows, or you would see an immediate break and a touchback and then attack lower again. For our purposes, based on what we can see in the market, we are usually gauging inflation expectations against AUD JPY. So if I were to bring inflation expectation up for you, that is usually our guide. Inflation expectation is telling us that AUD JPY is trading a little bit frothy. So yeah, inflation expectation rejected 3.5 level. But AUD JPY did not really follow through just yet. I'm going to take it down to the daily to have a more detailed view. So beautifully complement each other. Inflation expectation is usually a leading indicator. In this scenario, inflation expectations peaked around the end of March, but AUD JPY is still trading very frothy in regards to that. We tried shorting it, didn't really work out. We tried going long, that was pretty good until we had to close the trade a bit early because we had some complications with our GBP trades that were in the middle of short squeeze. So right now, again, we're in the same scenario where AUD JPY seems to be trading a little bit too frothy when you look at the underlying fundamentals and in specific when you look at inflation expectations. So I really would like to see AUD JPY to make some interesting moves around the weekly candle. If I go back and check out AUD JPY, around these weekly highs, I'll be very sensitive. I'm not interested right now to trade in between or make a big call. But once you see one of these highs gets taken, I'll be hawking these levels and see how market reacts. One of the key things right now driving, obviously, this entire yen complex are yields. So yields on the US just bounced. There is incredibly aggressive. Higher yields, too fast yields is bad for sentiment. So you're seeing your stocks coming down on the back of that. But something else that is right now driving this as well is Japanese yields. Japanese yields are keep knocking the 0.25 level. The level Bank of Japan said they will defend relentlessly, and they're going to keep buying bonds to keep these levels lower. So they're in a scenario where they either have to allow yen to drop, which means AUD JPY can pop, or they will have to give away that level. There's no in between right now. It's a really rare scenario where you see the Bank of Japan is caught between a hard rock and nothing much else, where basic Bank of Japan says we are defending the 0.25 level. For them to be able to defend that, they need to buy Japanese bonds to keep the yields lower. As they are buying Japanese bonds, they're flooding the market with yen, which makes the yen cheaper, or in other words, pushes AUD JPY, USD JPY, and all the other yen pairs higher. They also mentioned that they don't like how fast yen is accelerating recently. So that's a cause of concern. In the last month or so, it increased 10%, I think, on USD JPY, which is very unfavorable for exporters and also for importers for the country. Makes it difficult to do business. So again, right now we're in a scenario where they either have to give this yield curve control up to be able to let the yen come down, or they will continue that, which is most likely they will do, and then yen pairs will find the natural flows in the market. And right now the natural flow seems to be higher. By looking at inflation expectation, we could round off around these levels. Again, this is a place not to get too aggressively engaged. It's a place where you want to watch how it all starts evolving. So it's the two pairs we wanted to go through. There's one thing I like to say about GBP and how it traded last week. The GBPUSD experienced a 100 or so pip rally last week that pushed us out of our trade, which we were actively short. And I still believe in the trade. I think we're going to come lower, but it was just a short squeeze. So we were short at these, the break off here, quick acceleration. However, it was a total fake out. It was really a liquidity surge, and you saw it swing around for 100 pips or so. It was really just a liquidity surge. There was no news behind it. There was no reasoning behind it. The trade is still lower. Based on the analysis I shared 2 weeks ago, no, last week, again, analysis is still sticking that we should be trading lower. GBPUSD just really did that. Candle had no meaning. It was just really a short squeeze and nothing else. So I'm expecting these levels to continue crashing down. I'm not expecting these levels to hold. And ideally, if you can, we might even find a setup or so throughout the week to express the short sentiment we have. There's two last things I'd like to discuss as well as we're going into the next few sessions. One of them is gold. There's a lot of talk about why gold should be trading at higher levels, so above 2,000. We talked about this when it was in these lower ranges. So I'm going to go to the daily to just show you. So it's really just noising around, and we talked about that it could accelerate higher. Right now, gold is in a scenario where it's not really trading the way it usually trades. Usually it trades respectively to what bond yields are doing, or respectively to what the Fed is doing. So right now the Fed is increasing rates, bond yields are rising. None of that is positive for gold. But gold is rising right now on two different things. One is obviously a war in Eastern Europe, which is always positive for gold. Another thing is that inflation is extremely high. That's another positive for gold. And the third thing is there's a little bit of bids coming in. The market is thinking if this inflation gets out of hand, dollar will lose its value, and they're front running the trade and driving gold higher. For me, gold right now is in a place where it has potential to drive higher. It's very difficult to trade it at this level because it can spike about, but generally the sentiment seems to be there. It could be driving higher. Again, overall, if you're looking at it, we just wanted to give you the three main drivers for gold right now, why it is higher. And if any of those drivers get stronger or weaker, you can expect gold to react with it. Another thing we will be looking at, because we were short last week, is the German DAX, and we're continuously expecting this to come lower. So we shorted it around these levels. We had to butcher the trade. We had to basically close the trade in about 400 points profit. Couldn't really wait for these lower levels because I wanted to nurse the losses we took on GBPUSD. So there's always good to have one or two good running trades on. Then if you have a losing one, you can they can usually reabsorb it with your running P&L. Again, what we expect in lower levels on the DAX. I'm going to show you the DAX cash. What I'm looking at, the first target was to see that gap close, which more or less happened. But I'm still expecting this gap to close as well, which is way lower, and we might still get setups in that direction. So have a quick look at the calendar, see what that brings. So early Monday, we had some data coming from China. Data is a little bit outdated as they had lockdowns, and that means it could have been worse than that. Unemployment goes a little bit, and overall the picture in China is deteriorating. Market is expecting rate cuts from Chinese bank to come this week, which tends to help sentiment, but at this point we are not sure yet. RBI government all speaks today, which is not long after they rose interest by 50 basis points. So it would be worth listening to what he's got to say, but I'm really not interested until we have RBA monetary minutes on Tuesday morning to explore if they are giving us a timeline when they want to hike rates, and you should expect some reaction out of AUD around that reading. Nothing much going on until we have CPI from Canada. In my experience, Canadian dollar reacts irregular reactions, I should say, to CPI reads from Canada. So it's something I would watch, not actively trade. Ideally, we already have EURCAD running short today or tomorrow, and we'll be out of that trade before that data hits. On Thursday, we're going to have some more data on employment claims. Again, nothing we can actively work with. We've got some ECB speaking coming out, some Fed speakers. This one will be the most important for the week, which is Fed Powell speaking. It will be his last speech, I believe, before the Federal Reserve meets for their interest rate. And then there will be, so he will be speaking on Thursday, and then there will be a blackout period where none of the Fed members are allowed to publicly say anything in regards to the interest rate decisions with it. So the Thursday one will be watched closely. I'm expecting some decent price action before and after his speech. that should nicely round off our Friday trading. Friday, we have loads of data, but none of that data right now is on anybody's mind because the PMIs aren't really giving away too much about what the central banks and those countries are doing. ECB made it very clear that once they are raising rates, they will be doing very gradually. The bond buying will continue. On the other hand, we have Federal Reserve. They're very aggressive with interest rate movements, and they want to start quantitative tightening as early as May. They'll be doing a rundown of about 98 billion a month, I believe. So it's quite aggressive where the Fed is and very dovish where the ECB is. So that's why I believe that these PMI data will not weigh as much as they usually do, as they already, those central banks have the mind set what they want to do for the rest of the year. So that rounds up our weekly analysis. Again, there's not a lot of data to work with, so don't get too carried away with loads of trades. We are in the middle of April, and as discussed before, middle of April, we have loads of reversal trades, loads of profit taking, and not a lot of the moves might not make sense to you initially. So keep that in mind as we are navigating through the rest of the month. Next week will be much more interesting once we are post the French elections, and I'm really intrigued to see how Euro trades. At this point, positioning looks like we should be trading higher in Euro, but I'm very interested to see how it all pans out. Thank you very much, everybody, for attending. Wishing you all a successful week. Again, to wrap up, we're looking for short in EURCAD, possibly short in GBPUSD, and we're keeping a very, very, very close eye on what the yen pairs are doing, in particular what AUD/JPY does around those highs. So we have loads of inside bars building up, and it will be very interesting to see how it blows all out. Okay, thank you very much.